Are you curious in Charlie Munger's Tesla investment? You've arrived to the proper location, then. In this video, we examine the rationale behind Munger's recent commendation of the electric vehicle manufacturer, a reputable figure in the banking industry. We look at the possible causes of Munger's shift in opinion about the company, from the shortened delivery time to Tesla's impressive growth. We also talk about Munger's opinions on Elon Musk, the overvalued valuations of Tesla, and how to invest with humility and confidence in equal measure. So settle back, get a drink, and get ready to discover more about why placing an oppositional bet on Elon Musk might result in severe losses. First things first, though, please subscribe and hit the like button. Remember to tell your friends about it. That being said, let's begin the video. Tesla has made some headway recently by cutting the wait period for the delivery of its Model 3 and Model Y cars to only 1 week, despite the ups and downs in the price of its shares. This is incredibly comforting information. The company's electric cars may see a sharp rise in demand as a result of the shorter wait times. Charlie Munger, the titan of finance, may have had a sudden change of heart regarding the company because of it. Charlie Munger praised Tesla profusely in a recent CNBC interview, despite his prior misgivings about the electric car sector. He expressed his optimism about the organization and said it had exceeded his expectations, commending it for its amazing accomplishments in quick expansion. Munger even went so far as to call Elon Musk's Tesla an amazing accomplishment for the U.S. auto sector. Munger has previously criticized Tesla and Musk, so this endorsement stands in sharp contrast to that. Munger called Musk a remarkable fellow in 2018, indicating that he respects Musk's drive and entrepreneurial spirit. He did, however, also criticize Musk's actions, particularly his frequent use of social media to get himself into trouble. According to Munger's remarks, Musk need to exercise greater caution in his public remarks and concentrate more on managing his businesses than interacting on social media. Munger voiced doubts about Musk's ambition to colonize Mars in relation to his space exploration goals. Munger has maintained that the project's expense would be unaffordable and its danger would be excessive. Munger's remarks are in line with the worries raised by certain industry insiders and investors regarding Musk's audacious goals for SpaceX and his aspirations for Mars colonization. Munger had doubts about Tesla's value in 2019, saying that even though he didn't know if the company would succeed, the valuation was high. Munger's remarks demonstrate his conservative approach to investing and his conviction that a company's worth should be determined by its fundamentals rather than by hype or the mood of the market. Munger has a history of making investments in businesses with solid fundamentals and room for long-term growth, notwithstanding his misgivings about Tesla. In spite of this, Tesla has become one of the most valuable companies in the world, with a market value that surpassed $600 billion in January of this year. Munger's reconsideration of Tesla's position demonstrates the company's noteworthy achievements and standing in the sector. This incident during the Daily Journal's 2019 shareholder meeting is still very much in my memory. Munger said that he wouldn't personally hire Elon Musk, although he did voice comparable opinions about the man. Hearing that Munger thought he would rather hire someone who knows their limitations than someone who doesn't was startling at the time. Nevertheless, Munger conceded that overconfident people can occasionally succeed greatly. This is where we should take a moment to consider Munger's statements carefully. He clarified that he didn't want to be around folks who are constantly winning big and are living in fantasy. Rather, he wanted responsible people in his personal life. A shareholder questioned Berkshire Hathaway Vice Chairman Charlie Munger about his opinions of Elon Musk and Tesla's recent ups and downs during the Daily Journal annual shareholders meeting. Munger's answer emphasized the value of self-awareness and striking a balance between humility and confidence. He conceded that Musk might be odd and occasionally exaggerate his own abilities, but he might also occasionally be correct. According to his remarks, Munger believes Musk is a strong man who shouldn't be taken lightly. Investors that think a certain stock or security is overpriced and will decrease in value employ the short selling approach. When an investor shorts a stock, they borrow the shares from a broker and sell them right away on the open market in the hope of eventually being able to purchase them back at a cheaper price. the investor. Over the years, Tesla as a corporation has been the focus of a great deal of debate and conjecture, which has led some investors to feel that the stock is expensive and ready for shorting. At its height in 2021, short interest in Tesla was valued at about $47.8 billion, indicating that investors had borrowed and sold shares in that amount, hoping to repurchase them at a lower price down the road. Tesla shares, on the other hand, began a notable comeback in early 2023, increasing as high as 98% between the beginning of January and mid-February. Positive news, including better than expected fourth quarter deliveries and optimistic full year delivery projections for 2023, drove this upward trend in spite of persistent difficulties, including supply chain interruptions and COVID-19 lockdowns in China. As a result, Tesla short sellers suffered large mark-to-market losses in the first few months of 2023, roughly $6.65 billion. By assessing the current market value of the assets contained in the portfolio, the mark-to-market approach determines the worth of an investment portfolio. Notwithstanding these losses, Tesla's short interest currently stands at about $15.75 billion, or less than 3% of the stock's total float. This indicates that even though a small percentage of investors are still placing bets against Tesla, the quantity of shares being shorted has dramatically dropped, and the market's perception of the firm has generally improved. During this crucial period for Tesla, Charlie Munger has made additional remarks in public on the company. As vice chairman, he has played a major role in the development of Berkshire Hathaway and has shaped the company's investment philosophy, making it one of the most successful in history. Munger offers wise counsel, and short sellers can confirm that wagering against Elon Musk can result in significant losses. Because of his life lessons and investment acumen, Charlie Munger is a highly esteemed personality in the finance industry. In passing, BYD and Tesla are two businesses that concentrate on producing electric cars, but they differ greatly from one another. The American business Tesla focuses on producing renewable energy goods and electric cars. Elon Musk started it in 2003, and its main objective is to hasten the switch to sustainable energy. Tesla specializes in electric cars and offers a variety of types, such as trucks, SUVs, and sedans. In order to facilitate the expansion of its fleet of electric vehicles, Tesla is also investing in the production of batteries and developing autonomous driving technologies. Tesla automobiles are renowned for their stealth styling, extended range, and excellent performance. Conversely, BYD is a Chinese enterprise that produces solar panels, energy storage devices, rechargeable batteries, and electric cars. Since its founding in 1995, the company has grown to become one of China's biggest automakers. In contrast to Tesla, BYD manufactures conventional gasoline-powered automobiles in addition to electric vehicles. The company manufactures trucks, buses, and cars as electric vehicle variants. Additionally, BYD has contributed to the advancement of autonomous driving technologies. Regarding financial performance, BYD is significantly smaller in comparison to Tesla's market capitalization. In April 2023, BYD's market capitalization was approximately $100 billion, while Tesla's was approximately $870 billion. In terms of sales, Tesla has also outperformed BYD, having shipped over 1 million electric cars in 2021 compared to BYD's approximately 530,000 deliveries. In general, BYD and Tesla are both prominent players in the electric vehicle market, but their approaches and areas of concentration differ. While BYD manufactures both conventional gasoline-powered cars and electric vehicles, Tesla is primarily focused on the luxury electric vehicle market. Although BYD has also shown success and is expanding in the Chinese market, Tesla has a higher market capitalization and has delivered a greater number of electric vehicles. Munger has stated that his all-time favorite stock is BYD. While BYD primarily concentrates on producing affordable electric vehicles and has a larger capacity for manufacturing batteries, Tesla is more well-known worldwide and has a bigger market capitalization. Munger thinks that when compared to Tesla, BYD's Chinese production capability is practically absurd. A greater variety of models, including premium automobiles and trucks, are offered by Tesla, whilst BYD primarily concentrates on producing inexpensive electric vehicles. Munger brought up the fact that whilst Tesla's car prices dropped in China last year, BYD was able to raise theirs. In Q3 2022, Tesla shipped about the same number of automobiles that it did in the entire year. With Rev.